Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Nvidia earnings on deck, a huge moment for the world's most valuable company and the stock at the center of the AI boom. Plus, SpaceX inches closer to launch. It could be today that Musk's company unveils its IPO filing. And we take a deep dive into SoftBank's bet on OpenAI. Insiders worried that Masayoshi Son is too tied to the AI giant. Right now, Nvidia is everything that the Bloomberg Tech audience is clicking on, reading about, talking about. We're up 2%, taking our year-to-date gain 20%. We expect 80% top-line growth, 85% growth in earnings per share. But there are questions about China and how much momentum this AI story has. Let's get the stock story for the world's most valuable company with Bloomberg Tech Equities reporter Carmen Reinicke. Friday, Monday, Tuesday, we were almost in correction territory with Nvidia at the heart of what was happening in chip stocks. You write today that Nvidia's earnings will either make or will break the rally in chips. Why?
Yeah, so it's been so important, Nvidia overall, right? We know it's sort of the kingmaker of the AI trade. It's the stock that all investors are watching really to see the demand going forward and if that story is still strong. And so this huge rally that we've seen in the chip making space, really from this March 30th low up through last week, it's had incredible momentum. But Nvidia is really the thing that investors are going to watch to see if this can go forward. We got a little bit of a respite. Over the last few days, we saw a sell-off, but we're kind of back up. That rally is going stronger today. So how Nvidia talks about the future demand here is going to be paramount to that entire sector.
Carmen, the MLive and Macro View team go back and say what typically happens post-earnings for Nvidia, even if it is a blowout. And this is the answer. It's a pretty mixed picture, right? There is no guarantee that even if Nvidia has a barnstorming print, that in the days that follow, even the month that follows, the market will go with it.
Exactly. So something that we've seen over the last few earnings reports for Nvidia is that shares have actually fallen the day after results, even if they're very strong, even if it's a blowout report. Some of that is pretty typical around earnings. You get a little bit of a buy the rumor, sell the news. Obviously, this could be a good place for investors to trim, to sort of take some profits, especially after such an incredible rally. And the other thing I'd say is that, so Nvidia is still the most important stock in the S&P 500. It's the largest company in the world. It commands the most weight in the index, but it's not immune to broader macro pressures. And we have seen sort of the pull and of the AI trade continuing over this year. So while it's very important to see the future demand there for these stocks, it's also no guarantee that this is going to continue to march forward and up to the right, especially just in the days after the report.
Hey, Carmen, how often before the show and before a big moment do I IB you and I say, Carmen, check me on this? Let's do it again. Nvidia's 24 times forward earnings, 12-month forward earnings, that seems below its historical average. I'm basically saying, tell me about the valuation of this company going into this print.
Yeah, so we've seen Nvidia's valuation sort of continuously tick down, even through the stocks rally, because its earnings growth is so astronomical. So basically, what investors are paying for that forward earnings growth is less than a lot of other companies, even other companies in the space that command a much higher valuation. So it's interesting that it's so cheap. Usually that entices investors to jump back into the stock, but that remains to be seen. We'll see what happens in the after hours today.
So smart, and given the impact at the index level, that's why I wanted to start on the stock story. Bloomberg's Carmen Reinicke, thank you very much. That's the broader picture. Let's dive into Nvidia's specific concerns. We go to Bloomberg's Maggie Eastland, and this is about a story of AI momentum, the infrastructure build out, the basics. What does the world think Nvidia is going to say after the market closed today?
Well, look, across the board, folks are expecting a really strong performance from Nvidia. But like we discussed earlier, that might not necessarily translate to stock market gains, because at this point, they're expected to do well. AI demand is strong. Jensen Huang has said that repeatedly. The thing that they're going to be looking through is trying to determine how long can this AI boom really last. is this sustainable for demand to be this strong for this long? And then more specifically, what are some of the supply constraints? Obviously, demand is skyrocketing. There are things like memory, like networking, that Nvidia could run into bottlenecks that ultimately limit how much of their AI compute they're able to supply to hyperscalers and other customers.
Maggie, we're in the unusual situation, aren't we, where it's Wednesday, we have earnings. I just got back from Las Vegas. We spoke to Jensen Huang on Monday. And to your point on the supply-demand dynamic, this is what he had to say.
We have the largest supply chain in the world. Our partners have done a great job securing supply for us. And so all of the pieces go together. The silicon photonics is lined up. Everything is all lined up. It's just that the demand is much greater than the overall capacity of the world.
Then there's the overhang. And I think you and I both know the overhang on Nvidia is probably China. Even if it's not material in some sense, where do we stand on China?
Look, the outlook is still very cloudy. So back in March, Jensen Huang told investors that he was firing up H200 production and he had U.S. permissions. Now, the U.S. has confirmed that, but what we're seeing, even after Jensen joined for the trip to China last week, is that U.S. officials are saying China is blocking its companies from purchasing H200s. So that's a question that investors are going to be asking, and Nvidia is likely to address some of that cloudiness during its earnings call after hours.
It's been really interesting sitting next to you at some of the events of the last 12 months, right? We started with CES in January, then GTC. A lot of this is about Jensen Huang trying to convince the world that AI is doing things that are meaningful and useful. How much do you expect him to kind of linger on that on the call? Not necessarily talk about the data centers getting built with Nvidia GPUs, but he tends to offer up, hey, this is what I'm doing with this particular piece of software, or this is what I see in the enterprise.
Absolutely. I'm fully expecting Jensen to emphasize all of the applications for AI, right? That's the question that hyperscalers are also sort of facing is, what is the end use of this? Where is the return on investment going to finally arrive? So we're definitely going to see him focus on that. You also may see a focus on inferencing with that Grok acquisition. You know, there is this story in AI land that essentially compute demand is moving from training to inferencing. And the question for Nvidia is, are they going to be able to maintain their competitive moat as the industry makes that shift?
Bloomberg's Maggie Eastland, top reporting. Thank you very much. There's another big one out there today, and coming up, SpaceX moves closer to what could be the biggest IPO in market history. We're waiting on a pretty key document, and we're going to break down what to expect. It is primed for liftoff. This is what financial markets look like right now. The Nasdaq 100 rebounding up more than a percentage point. Semiconductors rebounding again. Friday, Monday, Tuesday. We were headed for correction territory. We're up almost 4% on the stocks. Nvidia's at the heart of the story, and we're going to keep that story throughout the show. We'll be right back. This is Bloomberg Tech. Investors are watching, waiting for SpaceX IPO. The S1 could flip public as soon as today. That's the reporting. And the company reportedly targeting a $75 billion raise in a listing that could value SpaceX at up to more than $2 trillion. We also learn more about the banks. Let's talk to Bloomberg's Anthony Hughes. It looks like Goldman is flush lead left. Surprising, because Morgan Stanley is also a lead bank.
Hi, Ed. Yes, well, I think that it's not that surprising. Goldman has got the coveted lead left role here, but whether that really means they're leading the IPO, I mean, they are leading the IPO, but to what extent they are leading it in a joint capacity with Morgan Stanley will be sort of, a big topic of debate in banking circles. But as we are expecting the prospectus to show that Goldman is named first and Morgan Stanley second, and then three or four of the other big banks will be, on the top line. But it's for Goldman Sachs. There's the bragging rights associated with that. But we know that Morgan Stanley is very heavily involved in the IPO as well. And it may be that those names are in alphabetical order. It's possible. And also, we know that Goldman Sachs has obviously done a lot of work for Tesla in the past as well. So, we knew that Goldman Sachs was going to have a pretty big role in this as well.
With Musk, is anything as straightforward as things being in alphabetical order? I mean, Morgan Stanley too, right, has done a lot with XAI, did a lot with Twitter at the time that Musk bought it. The thing about you, Anthony, is you're a student of history. You've covered a lot of these IPOs, tech IPOs. Like if you look at Alibaba, there was a flush lead left then. But after the fact, when you pour through it, it was pretty much equal economics.
Yeah, if we go back to Alibaba, which was in 2014, and that was the biggest IPO the biggest US IPO. It is still the biggest US IPO of all time, but that IPO actually listed Credit Suisse in that lead left spot, and Credit Suisse doesn't exist in the form that it did anymore. But at that time, I do remember that there was a lot of debate in the banking circles about which bank was really leading the IPO. And I think if you talk to people who were involved in that transaction, Credit Suisse wasn't necessarily the bank that did the bulk of the work. But what we'll actually see, what we'll see here is that what we're expecting, I think, or what is rumoured, is that the top 5 banks would actually get equal economics or similar fees. So, there'll be some differentiation between the roles that the banks play, but those top 5 banks or so will likely be getting similar fees. And if you go back to Alibaba in 2014, the top 5 or 6 banks did get the same fees. So, there is some parallels with that transaction.
Again, we are expecting the biggest IPO of all time, and those banks are going to get big business from that. Bloomberg's Anthony Hughes, thank you very much indeed. Staying with SpaceX, the company is reportedly planning to acquire coding startup Cursor just 30 days, or within 30 days, after its IPO. That's according to sources. In April, SpaceX said it reached an agreement giving it the right to acquire Cursor for $60 billion later this year, or alternatively, pay a $10 billion fee tied to the company's partnership. Bloomberg's Rachel Metz has been across this, the chaos of it, every twist and turn. I mean, it's so interesting, right? We were asking ourselves at the time in April, why is it structured this way? And then you break the news last night that actually they go public, and then there's a race to get this transaction done.
Yeah, so this transaction, according to our reporting, is set to proceed 30 days after the IPO. So what that doesn't mean that it will close necessarily right then. Sometimes there's regulatory looking into that happens, and that could take up to a few months. But it is set to go ahead, or expected, I should say, to go ahead around that time. And the other thing that we found that was interesting is that this $10 billion fee, we knew in the past from past reporting that it was essentially a breakup fee if the transaction didn't happen. But we also found that it's going to be in all cash. It's not going to be in credits for compute or something like that.
There's going to be a section of the Bloomberg Tech audience, with respect, they're going to say, hold on, SpaceX is acquiring a coding startup, Cursor. And let's fill the gaps for them. SpaceX acquired XAI just before it plans to go public. SpaceX AI is like this bigger entity. Where does Cursor fit in?
Yeah, that's a really good question. And I think part of it, as you mentioned, is this combination between SpaceX and XAI. XAI has a ton of compute. Compute is something that Cursor really needs more of. As we saw just the other day, they announced their latest model, which is meant to help people with coding, as some of its past have done. And it was partially trained on Colossus 2, which is a new data center from XAI. So you're starting to see the companies already working together, and this sense that they can be really helpful to each other.
What I understand is about people. Something that happened post XAI SpaceX integration, a lot of talent left. Do you have any sense of how Cursor feels about that, right? There is the, wow, we get to work with Elon Musk, and there's also the, uh-oh, we have to work for Elon Musk.
That's a really good question. I mean, I think these two companies have been familiar with each other for a while. There have been a few Cursor people, I believe, that have gone over to XAI. So it's going to be interesting to see what happens, right? I mean, as we know, as you mentioned, a lot of people had left XAI over time. But I mean, Cursor, they've built a really strong team, and we'll just have to wait and see.
Bloomberg's Rachel Metz, top reporting. Thank you very much. Coming up in the program, we're going to speak with AMCA CEO Malik after raising a $300 million Series B, unicorn status. manufacturing in critical defense and aerospace. That's next. This is Bloomberg Tech. Let's take a look at today's big number, 8,000. That's how many employees Meta is laying off starting today as part of a previously announced restructuring aimed at reducing costs while investing in AI. The company began notifying workers around the world this morning. Meta's engineering and product teams are expected to be the most impacted. Meanwhile, remember we told you yesterday about Standard Chartered CEO Bill Winters saying his company plans to cut staff too to replace, quote, lower value human capital with AI. Well, those comments received a bit of a backlash online, including from former Singapore President Halima Yacob, calling it disturbing to describe workers in such clinical terms. Singapore and Hong Kong serve as the primary hubs for Standard Chartered's global operations. That's all prompted the CEO to reassure staff. In a memo seen by Bloomberg, Winters is striking a more empathetic tone and emphasizing the bank's commitment to transitioning its workforce. Really well read today on Bloomberg. AMCA has announced a $300 million Series B, valuing the company at more than $1 billion. The company offers an integrated platform to rapidly develop and manufacture critical aerospace and defense components. Joining us is AMCA CEO Malik. In the private markets, this space is alive and well, right? We've talked so much about reindustrializing America. Help me understand what AMCA is. You know, it sounds like contract manufacturing for the industries, defense technology, aerospace, that are at the forefront of what's happening right now.
Absolutely. So what AMCA is actually doing is we're developing and then manufacturing critical components, not just contract manufacturing, for critical readiness and production gaps that our customers have. And so typically these components, there's only a single source for in the country, unlike other contract manufacturing categories. And our business designs these components, qualifies them rapidly, and then manufactures them. So it's a little bit different than your typical contract manufacturing business, which is, just a machine shop,
right,
looking to produce at scale.
Jay, case study, wire harness, right? That's something we talked about a lot in this program. Heavy dependence in that case study on China. Give me a similar product, a similar sort of component that you are solving for, where there might be a reliance on an external country to get it.
Yeah, I'll give you two examples. One example are the sensors that we put onto our, put onto almost all of our industrial platforms. Today, a lot of those sensors are sourced. The sensing elements are sourced from offshore, offshore companies and nations allied with them. So that's one example. Another example would be, capacitors and other passive electrical components. These are often components that have been offshored, to Asian countries over the past 2 decades. And America today has a very low, dwindling supply base for these types of engineered components. And so those are two examples of areas where we are designing in the country and then manufacturing in the country those components for the warfighter.
Jay, I just have a few rapid fire questions, if I may. What year did you found this company?
2024 in November.
2024 in November. And is this $1 billion valuation post-money or pre-money?
That is post-money.
So in about 18 months, you've founded, launched, and scaled up this company and got to $1 billion valuation. What should I infer from that, the pace at which you've done that?
You should infer that, we're living at, I would say, the largest gap between what America needs and what America is able to produce in generations. It's a generational opportunity for folks who are looking to build in this country. I think over the next 5 to 10 years, you will see a lot more manufacturing companies in America building for America. And we're just sitting at the forefront of this, I think, immense growth curve that's coming and is already happening in the nation, both for defense and aerospace customers, as well as in other categories like AI infrastructure, energy, robotics, et cetera.
Jay, who are your customers?
Due to the sensitive nature of the work that we do, I can't disclose any specific names. But some of the names that we have been able to disclose are Boeing, Airbus, Honeywell, Lockheed Martin, and then certain branches of the military. But all of our components today, they go onto platforms we all know about: 737 Max, 777, F-35s, F-15s, F-16s. Our tanks, MK1 Abrams. So there's plenty of different platforms that we're on today that the country actively uses.
It's interesting. We've probably spent a lot of time understanding some of the problems that those customers that you've just outlined have. But probably of AMCA, it's better to talk about what your constraints are, where the bottlenecks are for you in your own supply chain.
In our own supply chain, there are certainly, big gaps right now at the sort of like infrastructure level. Like I mentioned, for sensors, for example, we need sensing elements. These are highly precise, elements that go into sensors that the country doesn't have a lot of suppliers for. So in those cases, we're taking a new approach. We're vertically integrating a lot of our supply, designing that in-house, and then manufacturing it in-house to solve gaps where the domestic supply chain is not able to supply those components.
Malik of AMCA raising $300 million, $1 billion valuation. Thank you very much. Plenty of other news headlines for the show. It's time for Talking Tech. First up, OpenAI is planning its first international flag. The ChatGPT maker committing $234 million to launch a new facility in Singapore, its first so-called applied AI lab outside the US. Partnering with local authorities, the hub will hire over 200 engineers to embed advanced models straight into healthcare, finance, and public infrastructure. Plus, Alibaba's matching Nvidia's breakneck pace. Its chip unit, T-Head, just unveiled a new AI accelerator packaging 144 gigabytes of memory for complex autonomous agent tasks. Alibaba plans to publicly list the business to tap investor appetite for Chinese silicon alternatives. And Google is redesigning its iconic search box and adding new AI coding tools, the biggest update to the product in more than a quarter of a century. At Google I/O event on Tuesday, the company also rolled out several new tools for developers to write code using AI and to manage agents. Coming up, we're counting down to Nvidia earnings later today after the closing bell. And up next, we'll discuss its role in the wider chip ecosystem with Baillie, Gifford's Paulina, McPadden. This is what markets look like right now, and Nvidia is central to that story. Nasdaq 100 rebounding, up 1.4%. Semiconductors, after 3 straight days of heavy declines, almost in correction territory, rebounding, up 4%. Nvidia is now near session highs, up more than 2%. Halftime in the program. Stay with us. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Nvidia earnings on deck. Company reporting its earnings results after the market closed. We're near session highs, up more than 2%. And for many watchers, China is top of mind.
The Chinese government has to decide how much of their local market do they want to protect, and how much of their local market do they want to expand with more AI capacity. My sense is that the demand in China is so incredible. Just like it is here, agentic AI is also making enormous progress there. My sense is that over time, the market will open.
2 themes: what's happening with China and demand outpacing supply around the world. Let's discuss where Nvidia sits in the global chip ecosystem with Paulina McPadden, investment manager of international concentrated growth strategy at Baillie Gifford. I'm so excited to talk to you because, yes, Nvidia is in your strategy, but so is everything else around the world. And what Jensen outlined there on China is so interesting. The base case assumption right now for Nvidia is zero access to China. Maybe we'll get some clarity. There's everything else that comes with that. And I just wonder how much attention you really pay to Nvidia's ability to service the China market or not.
I mean, it's a really good question. And I think the honest answer is it's not really factored into our upside cases for Nvidia for a while, because the problem there is you're having to try and prejudge what politicians might want to do at some point in the future. So H200s have been approved for export to China since last year, but it's the Chinese government's decision not to approve purchases by Chinese companies that has stopped that sale going through for Nvidia. Now, I think the really interesting long-term question for us is actually what that means for the broader supply chain in the long term, because is there a case that China could build up its own domestic chip supply chain? Now, long term, maybe that's possible. Maybe it does threaten Nvidia eventually, but two things give me comfort on that over at least the next 5 years. One of those is that the existing high power chips in China are still a fraction of the performance of Nvidia's leading chips. So I think that gives non-Chinese companies and AI researchers a leg up for the long term. And the second thing is it's actually really, really hard to build up a scaled and complex semiconductor supply chain. It's not as easy as just putting capital into it as China has done in the past with things like EVs and immersion to global dominance in the battery supply chain, for example. These are extremely complex bits of equipment that require cooperation around the world. And that's just not something that I think you can do year on year if you're only relying on the domestic demand that you get from China and you're not able to sell internationally.
We just showed SK Hynix is a part of your strategy. And what we played to you a moment ago was a conversation I had with Jensen Huang on Monday. And it seems memory is still the bottleneck. But the way that Jensen outlined it to me is 3 years ago, he went to the memory makers, including SK Hynix, and he said, this is what I think the world will look like in a few years' time. And he tried to convince them to invest in permanent capacity. You know better than I do, Paulina, memory has been boom and bust, cyclical, historically. In your strategy for SK, is that different now? Is there permanency to the capacity that's needed?
So I think bottlenecks is a really interesting framing because people tend to think, a bottleneck is extremely investable and that can lead to a lot of growth and a lot of upside. And that's true to a certain extent. But I think markets are actually quite good at, in some cases, recognizing bottlenecks well ahead of time and investing in them before the fundamentals even come through. So as long-term investors, what we're trying to do is identify these structural opportunities or companies that become even better as they scale and deepen their competitive position in the ecosystem. So I'd contrast SK Hynix here on the one hand with TSMC, because to some extent it's a portfolio construction question. So I think that there is a potential that SK Hynix becomes a substantially better company over the long term. The fact that they are able to extract these long-term purchase agreements from customers now is really a substantial difference over history. The industry has consolidated. It's not as irrational as it used to be. And I think that there is a case to be made that with the rise of HBM and in particular custom HBM, that creates a degree of lock-in with customers. That means that these are no longer commoditized products as they have been in the past. But that's just a hypothesis. And I think we're going to see how that develops over time. And I'd contrast that with something like TSMC, which is actually the largest position in our portfolio, where I think they have demonstrated that extreme control and dominance over their entire supply chain and the ability to coordinate multiple actors in an increasingly complex ecosystem. And that means that as semiconductors become ever more complicated to produce, TSMC just keeps getting better.
Sometimes you can't say what the story is from just a few market sessions, but Friday through Tuesday's close, we were almost in correction territory, particularly in the chip sector, right? And you're coming to us from sunny Scotland. I was trying to make sense of what the net outcome was of the President of the United States trip to China. And without putting words in your mouth, I think that you would say investors now start to look outside of the US, look internationally.
I would certainly hope so. There's such a rich hunting ground for AI-related names outside the US. I think there's a really interesting dichotomy that chips and AI is sort of designed in America, but it's manufactured internationally. And whether it's TSMC actually making the chips themselves, whether it's SK Hynix putting the memory inside the systems, or ASML that builds the EUV machines, the lithography machines for producing the chips at TSMC fabs. They do that in the Netherlands. Like, all of these companies are extremely interesting, again, extremely dominant in their particular industries, and that makes them great investments for a concentrated strategy like ICG. I think the other thing that we can do, being based in sunny Scotland, is take that step back and say, yes, the market is doing its thing. There's a tendency, I think, for the market to price a lack of a catalyst as a negative thing. The fact that there wasn't really any news about chip exports coming out of the Chinese summit was seen as a bad thing. But I think over the very long term, none of that affects the fundamentals of any of these companies. They are still extremely strong growing. And in fact, the fact that TSMC raised its guidance for AI growth over the next 5 years to 56% is really encouraging because, again, they have this insight into the entire supply chain. And so the fact that they're able to do that with a great degree of confidence gives us the conviction as well.
Paulina, McPadden of Baillie, Gifford from sunny Scotland, putting a pretty sunny disposition on this reporter's face. Thank you very much indeed. From public markets to the private markets again, today's big take focuses on SoftBank's OpenAI bet. It's committed more than $60 billion to OpenAI, with founder Masayoshi Son reportedly convinced Sam Altman is leading the most important technology shift of the century. But as rival Anthropic gains ground, questions are growing, even inside SoftBank, about whether the company may be too heavily tied to OpenAI's success. Bloomberg's executive editor for Global Tech, Peter Elstrom, has the story. No surprise that around the world, the big tech take gets clicked on, right? Take us inside it. What are the details we're reporting? What do we learn about this dynamic between Masayoshi Son, his fixation on Sam Altman, and what the rest of that organization is thinking?
Yeah, so this is a deep dive into the situation at SoftBank. Masayoshi Son, as you pointed out, has been investing in startups for a long time. He's had several enormous hits, including Alibaba was one of his biggest successes, the Chinese AI company. And then he went into the Vision Fund and he made hundreds of bets on small AI, small technology companies, some successfully and some not so successfully. And now with OpenAI, he's committed more than $60 billion in capital, his biggest bet ever. It's a very big concentration of the money that he's investing in a single place, more money than he's ever put in a single company before. He's not only selling assets, including some Nvidia stock, by the way, he's also borrowing some money to be able to make this commitment to OpenAI and give Sam Altman the kind of capital that he wants. Now, as you mentioned, there are concerns that are being raised, including inside SoftBank, that maybe Masayoshi Son is a little bit starstruck here. Maybe he's being persuaded by this very charismatic founder to put in more money than really should be at this point. So it goes into some of the details of those concerns. And as you point out, this is at a time when OpenAI is facing some strategy challenge, some business challenges, and also reputational challenges, as we've seen with Sam Altman.
We're showing it $65 billion cumulatively through 2026. That's the reporting on the insider concern. What was SoftBank's response to the big take, Peter?
Now, SoftBank and OpenAI, we should say, pointed out that they have a great relationship. They feel like it's a very strong partnership at this point. But what some of the people have told us is that there are a few areas of concern. First of all, SoftBank and OpenAI talked about this big Stargate venture that they were going to do in the United States. You'll recall it was last year when they got together with President Trump and they talked about how they can invest $100 billion, maybe even $500 billion in the U.S. Now, they have begun to make some of those investments, but they've gone very, very slowly. And in the meantime, OpenAI has struck some other deals under the Stargate name. They've cut some deals with other data center operators. So Masayoshi Son, who sort of viewed himself as like an equal partner who's going to be able to play a very key role at this company, is not getting the kind of stature and the attention that he would like. He doesn't have a seat on the board. He doesn't even have an advisor seat on the board like many of the other companies there. But there are concerns inside SoftBank and outside SoftBank about how this relationship is going so far.
Bloomberg's Peter Elstrom with the big take. Thank you very much. An update on the situation with Samsung's workers' union, which has decided to suspend its planned strike. South Korea's Yonhap news agency says the union will put a tentative wage agreement with Samsung management to a vote. This comes after days of stop-and-start negotiations, with the union threatening an 18-day walkout that was supposed to start tomorrow. We'll keep tracking that story. Now, coming up, Forum AI CEO Campbell will be joining us to discuss how the major AI models are fundamentally unready to handle news and geopolitics. And Nvidia, earnings after the market close. That is the big story and factor in markets right now. This is what markets look like. At the index level, Nasdaq 100 up 1.4%. Big rebound after 3 days of declines in the SOX, up 4%. Nvidia is off its session highs, but up 2%. There's a lot riding. There is a beat and raise kind of expectation that Jensen Huang is going to tell us something big later today. This is Bloomberg Tech. A new study by Forum AI says, quote, AI companies are grading their own homework. The report reveals a staggering 90% failure rate on election questions across 4 major chatbots, and they are routinely serving up Russian and Chinese state media as authoritative sources. Joining us now is the CEO of Forum AI, Campbell Brown, who believes AI companies have to be different. The headline, Campbell, is that chatbots struggle with news accuracy, if we're going to make it as simple as we can. But I think the best place to start is with the methodology, what you went and tested and how you tested it.
Sure, Ed. We looked at essentially 3 dimensions, which is factual accuracy, bias generally, and then the quality of the sources that they used. And the way we did it was training judgment models with senior domain experts who architected benchmarks. This is an area, I think it's worth pointing out, that hasn't gotten a lot of measurement. Most of the measurement and benchmarks that you see around the models is focused on coding and math and model capability, which makes sense. I mean, this is where the model companies are making their money. But they're also marketing the chatbots as consumer products. People are using them for all kinds of questions. And certainly in an election year, political information is going to be really important. And they're not right now where they need to be.
I want to get to the midterms. Just very quickly, the eval process is called Newsbench, right?
Yep.
Do we have the why on why chatbots struggle with news accuracy? What's the cause?
Honestly, I think it hasn't been a priority. As I said, they're leaning into other areas in terms of the measurement. I think that's going to change, not only because consumers are looking for it and going to demand it eventually, but I think enterprise is starting to demand it, and that's again where their focus is from a business perspective. And being just okay on accuracy overall on news and politics and geopolitics is not going to cut it.
Let's talk about the midterms then. The Bloomberg report states the chatbot's answers about elections failed on accuracy, bias, or source selection 90% of the time. What I found interesting reading about that is there must be evidence, therefore, that the electorate, everyday Americans, go to chatbots for news in the first place.
You're seeing those numbers increase. I think more and more. We've seen a couple of studies showing people are using them for news more and more. And we found that about a third of the questions we asked on election-related questions had factual errors in them. But all of the chatbots failed on bias. Claude and Gemini gave left-leaning answers on election-related questions 100% of the time. ChatGPT 95% of the time. Grok was the only right-leaning chatbot that gave right-leaning answers on these questions, I think about 85% of the time. So you are by no means getting a straight-up answer or a balanced perspective. And people are asking, who are my candidates? What are their positions on the issues? And who should I vote for? So improving this between now and then. I mean, the one thing I am positive, hopeful about is there was a broad difference, I think, overall. Gemini handled a lot of the questions better than some of the other models, which shows there's area for improvement, but you can't fix something if you haven't measured it.
Campbell, I know you previously, of course, at Meta, Vice President of News and Global Media Partnerships, but also as an industry colleague, award-winning journalist and anchor, CNN, NBC News. Both sides you see. Do you see action on the news side and the likes of Meta, other frontier labs on actively fixing this, taking action on it?
Yeah, I do. I mean, I talk to people in the labs on a regular basis at all of these companies, and they do care about this and are beginning to approach it with a sort of different way of thinking. I think, one of the challenges we had, and you said it in the opening, is today these model companies are essentially grading their own homework. There's not independent evaluation. And I'm not calling for regulation. I have a private company, but I do think we need an ecosystem of companies and nonprofits that are doing independent evaluation. And I think the companies, the model companies that lean into this are going to make ultimately more trustworthy products. And I do think you're going to see the demand move in that direction, again, from enterprise. You're already seeing some states pass laws where they're requiring independent evaluation, but I think it's increasingly going to become more important.
Campbell Brown, CEO of Forum AI. It's great to have you on Bloomberg Tech. Thank you very much indeed. Now, coming up, we're going to get back to the top story. What to expect from Nvidia's earnings. The chip maker off session highs, still up just more than 2%. Top line growth 80%, EPS growth 85%. The market wants more than that. From Jensen Huang. This is Bloomberg Tech.
We've been licensed for many customers in China for H200. We have received purchase orders from many customers, and we're in the process of restarting our manufacturing.
That was Jensen Huang in March, singing a pretty positive tune about selling AI chips to China. This was the Nvidia CEO striking a slightly different note when he spoke to us on Monday.
The Chinese government has to decide how much of their local market do they want to protect, and how much of their local market do they want to expand with more AI capacity.
That needs to be reconciled. Some analysts are hoping to get more insight into Nvidia's future in China in its earnings later today. There's also the battle Nvidia faces with custom silicon. Kunjan Sobhani from Bloomberg Intelligence here to talk us through those expectations, writing that Nvidia has extended its AI lead even as custom ASIC competition grows. And so, I'm trying to understand this, right? We're talking about a world where we go from training to inference. And then the custom ASICs also, just as with the Nvidia GPUs, are in a world where demand is outpacing supply. So we're trying to work out the market dynamic. What do you think we'll learn tonight?
Yeah, look, tonight the standard beat and raise numbers, given where we are in the time and where the stock is, don't matter unless they are able to pass through a $90 billion hurdle mark, which is the high bar for the guide for the next quarter. Now, that should really make the buy-side bulls happy. I think tonight the key focus is going to be reassurance. There has been some noise around supply chain issues or liquid cooling with its Rubin ramp. We really need to hear that the Rubin ramp for the second half remains intact. And we would like to see that $1 trillion demand pipeline raise up the numbers from here.
So give me that 90 billion figure again. I just put FA Go on the Bloomberg back up. The estimate consent. Yeah, go for it.
When they guide for the next quarter, the high bar, it seems on the buy side, is 90 billion. So if they're able to clear that, that should be a very positive event.
Fiscal 2Q 27 consensus is 87.3 billion. The high side for the guide in the current period being $90 billion. So fascinating. I think Jensen Huang's talked about the performance of an Nvidia-based system against TPU, against other ASICs. He may well get asked again, is there any data set out there in the world, Kunjan, that evidences your argument that the Vera Rubin platform at least is extending Nvidia's lead rather than seeing its market share shrink?
There have been some third-party, benchmarks, and as the systems do roll out, which they haven't yet, there will be more benchmarks. And we have seen consistently NVIDIA system, the latest NVIDIA systems outperform what exists in the market today. But now it's no longer just about your performance, you outperforming on the specs, right? There's a use case, there's a concept of dollars per token per performance. So when we look at something like a TPU, where the entire architecture of the data center is controlled and driven by the company using it itself, they are able to achieve a much lower dollar per performance, which matters to them a lot.
Real quick, the Bloomberg Intelligence thesis on China?
Yeah, we didn't hear anything positive coming out of the trip with the Trump administration, so we are not going to increase or adjust any of our China revenue estimates anytime in the near term.
Kunjan Sobhani, Bloomberg Intelligence. Thank you very much. That does it for this edition of Bloomberg Tech. One last look, the countdown to Nvidia's earnings. NASDAQ 100, session high 1.5%. SOX rebounding up 4%. And Nvidia is kind of the heart of that story. There is a lot of optimism, but Kunjan Sobhani just said, raise, beat, doesn't matter. It's all about the outlook for the current period. We're just over 4 hours away from Nvidia's fiscal first quarter 2027 financial year earnings. Recap on the podcast. You know exactly where to find it. And I would. A lot of quality conversations throughout the hour. Thank you very much for joining us. This is Bloomberg Tech.